All right, everybody, welcome back for another deep dive.
Yeah, glad to be here.
So today we're looking at retirement income and specifically annuities.
Right, a hot topic for sure.
And to help us navigate this topic, pun intended, we're going to be looking at this Income Navigator Annuity from Atlantic Coast Life Insurance.
Interesting name.
Yeah, and full disclosure, the brochure we're looking at comes from Diversified Insurance Brokers. So full transparency there.
Sounds good.
But we're really here to break it down, figure out how this annuity ticks and more broadly, how it fits into this whole retirement income puzzle, right?
Yeah, exactly. It's really important to understand this stuff because retirement planning, it's not just about saving money, right?
Yeah.
It's about making sure that that money lasts as long as you do and hopefully even grows a bit.
Yeah, and that's where this whole concept of an annuity comes in, right? But before we get too deep in the weeds with this specific product, I'm curious, what do you think about when you hear that phrase, Income Navigator? What makes an annuity, in general, a good tool for sort of steering your retirement?
Well, I think the main appeal of an annuity, like the Income Navigator, is that it offers a level of predictability.
Okay.
Which is something a lot of people crave in retirement, right? Because with traditional investments like stocks and bonds, there's always that risk that the market could tank.
Yeah, and you could lose a big chunk of your nest egg.
Exactly. But with an annuity, you're basically handing over a chunk of your savings to an insurance company.
Yeah.
And in exchange, they promise to pay you a certain amount of income for a set period of time.
Okay, so it's like trading in some of your risk for some guaranteed income.
Exactly. And for people who are risk averse or just really value that peace of mind, knowing that they'll have a steady stream of income coming in, an annuity can be very attractive.
So this brochure we're looking at, right, it really touts these guaranteed lifetime withdrawal benefits, the GLWBs.
Right.
That seems like a pretty big selling point, right? Can you break down exactly how those work and what makes them so appealing, I guess?
Well, I mean, they're exactly what they sound like. It's a guarantee that you'll be able to withdraw a certain percentage of your account value every year for the rest of your life.
Okay.
Even if the market crashes and your account value goes down to zero, you'll still receive those guaranteed payments.
Oh, wow. So it's like having a safety net under your retirement plan.
Yeah, that's a good way to put it. It protects you from the downside risk of the market.
That makes sense, but I have to ask, if my account value goes down to zero, but I'm still receiving guaranteed payments, does that mean those payments are going to be locked in at a low amount? What about inflation eating away at my purchasing power?
Well, that's where the Income Navigator's growth features come into play, right?
Yeah.
It's not just about preserving your principal, it's also about growing your income potential.
Okay, so how does that work? This brochure mentions a 7% premium bonus and a 7% annual roll-up rate.
Right.
Can you unpack that for me? I mean, is that just simple interest, or are we talking about something more powerful here?
So the premium bonus is a one-time bonus that's added to your account value when you initially purchase the annuity. So basically, for every $100,000 you invest, they're adding an extra $7,000 on top of that.
Oh, wow.
Right. And then you have the 7% annual roll-up, which applies to your income account value for the first 10 years.
Okay.
And this is where it gets really interesting, because that 7% isn't just simple interest, it compounds each year. So it's like a snowball effect.
Ah, okay. So it's not just adding 7% of my original investment each year. It's adding 7% on top of the previous year's growth, too.
Precisely. And that compounding can have a major impact on your future income stream, especially over a period of 10 years.
I bet. So let's say, hypothetically speaking, that I've been contributing to this annuity, and those 10 glorious years of roll-up has come to an end, and now I'm ready to kick back and start collecting those retirement paychecks, right?
Right.
How exactly do they determine how much I'm going to get each month or each year?
So that's where the payout factor comes in. It's basically a multiplier that's determined by your age when you start taking income, and also the type of payout option you choose.
Okay. So the older you are when you start taking income, the higher the payout factor.
Generally, yes. The thinking is that if you start taking income later in life, your life expectancy is shorter, so they can afford to pay you a higher percentage of your account value each year.
Makes sense. So could you give me a hypothetical example? Say I have an income account value of, I don't know, let's say $200,000 when I hit 65. How would my income compare if I started taking withdrawals then versus waiting until I'm 70?
Well, I can't give you exact numbers without knowing the specific payout factors for those ages, because those can vary. But I can tell you that delaying your withdrawals usually means you'll receive a higher payout factor and therefore larger payments.
Okay.
So it's really a trade-off between receiving income sooner versus receiving larger payments later.
That's a really good point. It's not just about when you want to start taking income. It's about how much you want to be receiving.
Exactly. You have to weigh your options and decide what's best for your individual circumstances.
Okay, so I'm starting to see the appeal of this income navigator, this idea of uh, guaranteed income and some growth potential. But one thing that's always sort of bugged me about annuities is this reputation they have for being inflexible. You know, like your money's locked away, you can't touch it. Does the income navigator, does it offer any flexibility in that regard? Like, what if I have an emergency or want to take that once-in-a-lifetime trip?
Yeah, I hear you. Annuities do sometimes get a bad rap for being too rigid, but the Income Navigator actually offers a couple of key flexibilities that are worth highlighting. First of all, you can withdraw up to 10% of your account value each year without penalty after that first year.
Okay.
So, if you have an unexpected expense like a medical bill or if you want to take a big vacation or something,
Right.
you have access to some of your funds.
Yeah.
And second, there are also death benefit options. So you can make sure that any remaining funds in your annuity are passed on to your beneficiaries if you pass away. So it's not like your money just disappears.
Okay, that's good to know. So I'm getting a clearer picture of how the income part of this annuity works, the withdrawals, the guarantees, but I'm still a little fuzzy on the growth aspect. How exactly does my money grow within the annuity? The brochure mentions these different crediting strategies, but honestly, that's where my eyes start to glaze over a little. Can you break that down for me in simpler terms?
Sure. So basically, with the Income Navigator, your returns are linked to the performance of a specific market index, like the S&P 500, for example. But the important thing here is that there's a 0% floor, which means you're protected from market losses. So if the market goes down, you won't lose any money.
Got it.
But if the market goes up, you'll participate in those gains up to a certain cap, which varies depending on the specific crediting strategy you choose.
I see. So there's a bit of a trade-off there, right?
Yeah.
You're giving up some of the potential upside of the market in exchange for that downside protection.
Exactly. It's about finding a balance between risk and reward that you're comfortable with.
Right. Now, the brochure lists several crediting strategies: annual point-to-point, monthly sum, daily averaging. How do I know which one is right for me?
So each strategy calculates returns a little differently, and some are more sensitive to short-term market swings than others. Some strategies are better at smoothing out volatility, while others allow you to capture more of the upside potential when the market's doing really well.
Got it. So there are a lot of nuances to consider, a lot of moving parts.
Yeah, for sure.
It seems like working with a financial advisor would be really, really crucial in this situation, wouldn't you say?
Absolutely. I mean, an annuity is just one piece of the retirement planning puzzle, right?
Yeah.
And a good financial advisor can help you determine if an annuity fits into your overall financial plan, and if so, which type of annuity and which specific product is the best fit for your individual needs and goals.
Good point. And I noticed that Diversified Insurance Brokers, they actually work with multiple carriers, not just Atlantic Coast Life Insurance.
Right.
So does that mean there are other annuities out there that might be worth considering?
Definitely. The Income Navigator is just one option among many. There's a wide variety of annuities out there, each with its own set of features and benefits, Some annuities focus more on guaranteed income, while others might emphasize growth potential.
I see.
Some are more flexible in terms of withdrawals and other options, while others might have stricter terms. It's really important to do your research and compare different products before making a decision. And that's where a financial advisor can be a huge help, because they can guide you through that process and help you choose the best annuity for your specific situation.
Right, so it's not just about picking an annuity and calling it a day. It's about finding the right fit for you.
Exactly.
So, big picture, what would you say are the main takeaways our listeners should remember about annuities, especially in the context of this Income Navigator we've been discussing?
Well, I'd say the main takeaway is this. Annuities can be a valuable tool for creating a reliable stream of income in retirement, especially if you're risk averse, and really value that peace of mind, that predictability. But it's crucial to understand the details of the specific annuity you're considering and to compare different options before making a decision.
Yeah.
And again, it's so important to seek advice from a qualified financial advisor who can help you navigate the complexities of annuities and make sure that it's the right fit for your overall financial plan.
Couldn't agree more. Now, for our listeners out there who are on their own retirement planning journeys, here's something to think about. If you could design your ideal retirement income strategy, what would it look like? What features would be non-negotiable for you? Would you prioritize guaranteed income above all else? Or would you be willing to take on a bit more risk for the chance of higher returns? What kind of trade-offs would you be comfortable making? It's a question worth pondering as you chart your course toward a financially secure and hopefully enjoyable retirement. Thanks for joining us on this deep dive. We'll catch you next time.
Yeah, thanks for having me.
Always a good conversation.